Greetings, this is Manu Walia from Continuum Global Asset Management. It's September 4th, 2020, and as usual, we would like to talk a little bit about the markets. Of course, the last 2 days, the markets have lost anywhere between 5 to 7%, depending upon which index you look at. But we wanted to put some perspective based on our last video, which was put on YouTube somewhere around the end of May 27th to be exact. At that point in time, the S&P 500 was trading at around 3,020 points, and it went all the way up to, I believe, 3,600, a little over that, and now it's trading at 3,440. We were at that point in time or in the school of thought that the markets didn't have a lot of upside and they were stretched. Before I go ahead and tell you what I think of the markets now, I think it's important to just quickly name a few parameters that have really brought this, so to speak, uncertainty, turmoil, whatever word you want to use in the markets over the last 6 months. So we saw the markets reach their highs in February of this year. And then from there on, COVID was the buzzword, and it really changed the way we humans look at life itself. Everybody's changing the way they operate in the real world, in the marketplace, and your careers. People are going from commercial places to working out of their houses. They're putting masks on and all of that. Now, obviously, the shift in human behavior brought a shift in the markets. The markets lost 35% from the high. And then a very important thing happened. The federal government came in at an unprecedented way and put in almost $3 to $4 trillion in the market. And I don't know, I don't have an opinion whether that's good or bad, because taking upon a lot of debt and throwing money on a problem is obviously doing well right now, but I don't know what's going to happen in the future. And we can have a lot of different ideologies, inflation being one, the debt being so high, and how are we going to repay it, and our coming generations are going to pay for it. But that's not the point. The point here is, why did the markets go from down 35% to up 50%? And by the way, the Nasdaq before the last 2 days was up north of 60%. So was it human behavior? Was it fundamentals, or what was it? When COVID started, I started believing that we will have fundamental deterioration. That was seen in unemployment, that was seen in the reduction in economy, and so on and so forth. But on this right side of the equation, when the federal government came in and threw money on this fire, we saw a rebound of just significant proportion. I mean, 60% in 4 months is unheard of. I've never seen it in my career. So I started talking in May, and I just put up a newsletter, July, August newsletter, which is on our website, which clearly wanted, excuse me, investors to gravitate more towards cash. So what we did with our clients and in my own portfolio, we went all the way up to 20%, 25% in cash, and we hedged it with some S&P puts. I would say that I was a little early in doing so, because May and June, since that time, the markets gained another 13%, and now they're down, I don't know, 3 to 5%, depending upon where you're looking at over the last 2 days. So I wanted to make a big change in my view. And again, the disclaimers are, these are just opinions. Like Warren Buffett's partner, Charlie Munger, says, just because you put something on an Excel worksheet doesn't make it true. But having said that, it's somewhat of a guidance. We've used our proprietary models. And I think that qualitatively, if you look at the markets, you see that even if the United States or any geographic region, if they've lost 1 or 2 quarters of their economy to COVID-19, and it can be as abstract or as absolute as that. But if we did decide to say, okay, 2 quarters worth of economy or economic growth is lost, but on the same token, the federal government has put in 1 to 2 quarters worth of growth or production into the economy using whatever monetary and fiscal policies they have. And they've also clearly mentioned that they're going to keep these rates low. So I think that at this point in time, um, I would sheepishly say that the focus has sort of shifted from fundamentals to a more technical perspective, in my mind. And again, I want to be clear about it. I'm talking in the very, very short term. So when our newsletter came out in July and August, which was really at the end of August or middle of August, we were saying that we're going to see a 7 to 10% correction, raise cash. I think now, if you wanted to, because of the Fed put and what has happened to the overall economy, I believe that this correction that we're experiencing is more of a technical correction. And you can pick and choose your securities, and I'm talking specifically equities in the areas of healthcare, in the areas of technology, in the areas of consumer discretionaries. Now, I can't be exact because I'm bound by compliance, but on the same token, those are the areas that I would sort of start to invest in, use some of the cash that we had raised, and start buying. In any event, if you have any questions or comments, please give us a call. You can find all that information on continuumglobalassetmanagement.com, which is cgamadvisor.com, or send us a request, give us a call, and we'll be happy to answer any questions. Again, thanks for listening, thanks for watching, and hope you're having a great investing/trading day.